Hey guys, welcome back to another video. Today we'll be taking a look at FedEx. So as always, I like to start off by looking at their overview. So the current PE ratio is at a 16.18, which is really good to see as you ideally want to see this be at or around a 20 or less. So this is something important to look at because it shows you how risky the investment could be. So now looking at their dividend yields, they currently offer it at a 1.22%, which comes out to about 75 cents per share, which isn't too bad. It's always nice to see a company give back to its investors, even if it's a little bit. Moving into their income statement now, we're going to look at their revenue. So as of the most recent year, they're bringing in 83 billion, which is up almost 23 billion from 5 years ago. So this is great to see that there is still plenty of room for this company to potentially grow. They did have a little dip in 2020, but we all know what was going on in the world, so we'll give them a break for that. Now looking at their net income, so their net income also looks pretty solid. In 2019, they had a rough year, but it's good to see that the next 2 years put them back on track. The last thing to look at on the income statement is the shares outstanding. So this is something you want to see decrease. The more it goes up, the less your shares are worth. As you can see, it looks a little weird. So they're not very consistent at all, but overall they are down about 2 million from over the past 5 years, which is good. So hopefully they'll continue buying back shares going into the future. Taking a look at their balance sheet now, we're going to look at their current assets. So their current assets are looking good as they've grown to 20.58 billion, which is an increase of 63% from 5 years ago. Now looking at their current liabilities, as of 2021, they're at 13.66 billion. So it's great to see that they have 6.92 billion more current assets and current liabilities. The last and one of the most important aspects to look at in any company is the free cash flow. Cash flow is important because companies that have a lot of money on hand have the advantage of being able to pay off any debt, invest into future growth, or pay dividends. So this is clearly something you need to be improved on year after year. As you can see, it's not looking too good. They've had 3 total negative years, and in 2021, they're currently at 4.25 billion, so hopefully we can see another positive year going into 2022. In conclusion, I would say FedEx has some above average financials. Some criticism I would like to give is I want to see them buy back shares more consistently, and they need to work on their free cash flow as it's such a vital part of running a successful business. When it comes to buying the stock, I would recommend waiting and seeing if it goes back down to the $240 range. Two things I want to mention before I end the video is my trading strategy is centered around finding value in a company. If I don't see consistent growth in most or all the categories I cover, then I tend to stay away. Secondly, I also want to point out that I'm not a financial advisor. I'm just a guy speaking my opinion on stuff on YouTube, so I highly recommend doing more research before coming to the conclusion of buying or selling any stock that I talk about. If you guys have any companies you want me to take a look at, feel free to comment them down below. Otherwise, thank you guys for watching and have a nice day.